Anthony, hi. This is Bob Desmond of the Contrarian Trader. I received your second opinion request for HQY, so I figured I'd jump right on it, take a look at it, and I happen to like your pick here. HQY is looking fairly interesting. So we have a healthcare related, or actually, in real actual terms, it's more human resource related. It is a company that is related to supplying support. As you probably know this, but I'm going to say it anyway, just in case, providing support services to companies that offer health care savings accounts. So if you take a look at LinkedIn's report after hours today, you could see that the sector, anything doing with the human resources, the online job resource sector, is not doing well right now. I would expect to see more weakness in HQY based upon the report out of LinkedIn. So the reason why I'm bringing that into the equation is because I took a look at the bullet points that you laid out on your email, and I thought they were very good. Good, solid touch points that you wanted addressed, and that's really good stuff. So I could tell that you're going to do well once you pick up on our system. But what I want to first introduce you to is more depth. It's beyond technical analysis. What we're going to do is we're going to bring into the picture other areas of the market that could adversely or positively impact your specific stock. So just understand, going into the trading day tomorrow, if you continue to see HQY proceed down, it's probably because of LinkedIn. So that's just adding another dimension to your trading skills. It's very important. So I don't want to spend too much time on that, but that's my first thought when I saw the profile of the company. Automatically it becomes second nature that we do that as traders. What other company, what other sector could adversely impact the stock that I'm looking to trade or positively impact the stock? Right now we have the markets weak, we have healthcare weak, we have LinkedIn definitely weak after hours. So let's move on to your request. So let's go to the weekly chart first, because I'm going to take your bullet points. And again, I like the way you laid them out. Your thought process, it really gives me something to hone in on. Now, you pointed out that you believe that support was at 17.93. Now, I'm looking at a weekly chart, and I'm not showing that as a historical support level. So what you might be doing, I'm just making a guess here, you might be using a daily chart. My suggestion is that when you're taking a look at historical support levels, that you use a weekly chart or a monthly chart, because they're far more reliable as a resource to identify historical support. So when I take a look at the weekly chart, what I'm seeing is, and this is the value of, again, using a weekly chart, is 1 week, 2 week, 3 weeks, 4 back in 2014, the fall of 2014, where this support level here down at, let's average it out, let's call it 17.58. Now you're close, but 17.58 is a better support level. And in this market environment, this very, very weak market environment, I would allow it to even pull back to a low of 17.23. Now, if the stock reverses off of 17.58 and closes higher, then I would say, okay, that's probably going to hold. But in this market environment, I would say just be cautious. 2014 was a very bullish year, and this stock had a series of fits and starts. You would expect that in a year where the markets are not doing good, that this support level is going to get retested and retested hard. So give it some room. Now to your RSI. RSI weekly chart, 25.39. Yes. Is it by the academic definition oversold? Yes. Not by what I would call a textbook definition of a contrarian oversold level. I'm looking for blood in the streets. And it's not even necessarily on a weekly chart. I like the fact that you're below 30 on a weekly chart, but I care more about the daily chart, because this is not an investment, right? We're not looking to put this in our 401k and hope that 20 years from now, we're going to have a big nest egg based upon HQY. We're looking to make a profit, a short-term profit. So rather than rely upon the weekly chart, I would focus more on the daily chart. And if you ever take notice of my trades, I only watch stocks that are really being decimated, and I'm trying to find a bottom in those names when RSI is clearly below 20. So by the definition put forth by books like Technical Analysis for Dummies, is the stock oversold because it is RSI below 30? Well, we could have said that here, right, when it went below 30, and that was at, let's use the low to be fair, 25.93. We're now at $18 per share. So it's not an indicator that you want to use as a standalone indicator. You did the right thing. You look for historical support. Then you took into consideration the RSI. But in this case, I would use the daily RSI because we're looking for a short-term swing trade and not the weekly chart. So your RSI is below 20, but recently I've been seeing a lot of RSI going below 15. So I think that if we hit, back to weekly chart, if we hit this historical support level seen back in 2014 or down to even 17.23, we could see RSI below 15. I find it more attractive there in this market environment. 6 months ago, 8 months ago, I would have been fine with RSI 18.64, looking for a early entry point. Right now, I need to hold the stock to a higher standard than what I would have 6 months ago because I'm looking to buy the stock. And again, because the market is under duress right now. The Bollinger Bands, yes, you're absolutely correct. The stock is trading down below the third standard deviation Bollinger Band in red. That is a very positive setup. I will grant you that. And I will add to that the stock is trading with RSI below 20 and below the third standard deviation Bollinger Band. That's a nice setup. So we have a good setup here for a trade. It's now a matter of when does it hit our support level on a weekly basis. That's what we're looking for. And our competitors aren't. The shorts that are in this name are asleep at the switch. They're betting the stock is going to go out of business. We know better. We know the stock is probably going to have a short-term rally, and we're going to enjoy that rally. Notice how I'm saying we. I'm stealing your idea. Thanks for bringing it to my attention. All right, so you're right about the Bollinger Band, no doubt about it. Caution, don't use the third standard deviation Bollinger Band as a standalone indicator only. Don't trade off of this because what could happen is that the stock could trade sideways for a day and then continue to resume its downtrend. Now, the fact that you have RSI oversold and the stock trading down below the third standard deviation, that makes it all the more interesting. Volume. Yes, volume is definitely declining, as you mentioned, below average. Excellent observation. Short interest. I'm glad you brought this up because you brought up a trap that many people get lured into. And let's clear that up right now. And I'm so glad you brought this up. Okay, so your attachment showed a 5.51% short interest in the name. Yahoo Finance is showing it at 7.96. I believe your date is as of January 1. This is as of January the 15th. So we have more shorts leaning into the name, and I love that. That means that they're coming right into our trap. Now, in this case here, the percentage of short interest means a little. And you may be saying, why is that? Almost 10% of the shares are short. Why doesn't that matter that much? It's because, let's use a hypothetical. Let's say that the stock traded not 364,000 shares per day on a 3-month moving basis. Let's say it traded 3,364,000 shares per day. The percentage of shares short would still be the same. There would be no change just because we had volume very high. What matters is this, and I would ask that you take a look at this moving forward and take it into consideration. You want to take a look at the total number of shares short. And in this case, as of January the 15th, you have 2.64 million shares held short. Now, what I do is this, pretty simple. I take out my calculator, I type in the total numbers of shares short, 2,640,000, divide that by the 3-month average daily volume, which is, let's call it 364,000, equals, this is the number that I'm concerned with. This number here is the number of days that it's going to take shorts to cover all of the short interest in HQY. And in this case, it's 7.25 days. That is a good setup. This is what you'll hear me refer to as a multi-day short squeeze candidate. So I like the setup here. I like the short interest. If the 3-month average daily volume was 3,364,000 shares per day, you're talking less than a day to cover the total number of shares short. I wouldn't be interested in that trade. I would look for other opportunities, unless, of course, this is the only one on my screener, and I would look for another catalyst that would cause me to get involved with the name. And in this case, you have excellent fundamentals. Revenue growth, huge, almost 40%. Quarterly earnings growth, growing at 34%. It's got cash on the books, no debt. I like the name. I think it's great. It's expensive, very expensive, but since when do PEs matter? So let's go back to the chart. I hope this helped, and if it didn't, please let me know. All right, so at this point in time, the way I'm looking at the chart, and I'll go on to my additional analysis of it if you don't mind me doing so, and that is the fact that the stock is now breaking down below the lower band of this downtrend channel. In short, it's going parabolic. Shorts are throwing in the towel. LinkedIn, that news after the bell today is good news for you as you're looking to purchase the shares, because it's going to send the stock even lower. Now what I want to do is, in a bull market, I'd use a 30-minute chart. In a bear market, I'm going to go with an hourly chart to identify when, after a stock has hit historic support, I want to begin accumulating shares. So let me annotate this chart for you. Hourly chart. So what I'm doing here, Anthony, is I am taking a look at and I'm reviewing divergences, higher lows, things like that. I am looking for clues that will not appear on the daily chart. Okay, so now I've uploaded HQY, hourly chart, and we're looking for signs of hope. And what you're seeing on RSI is a higher low get put in, despite the fact that the stock is making lower lows. That's a bullish setup. That's a good sign. Volume into the close was strong. That's good. Probably some shorts covering, though. Before I talk about the Stokes, I want to go back to the price. Here's your upper band of the declining downtrend channel. It actually closed slightly above this upper band of resistance. Now, the problem is that if this is a short covering rally into the close, this, what appears to be the beginning of a breakout, may not hold. It may, but it may not hold. I'm skeptical, especially with LinkedIn's earnings after hours today. So net, a good sign. I would prefer to see the shares trading down at 17.58, and I think we could still get there. Now, the Stokes. The Stokes have broken out, and they've definitely broken out. No doubt about that. And let's bring this up. Now we could see Stokes are now above. We have a breakout in earnest, and they broke out back here when the stock was under pressure on the 4th of November. Now, the stock has made new lower lows. What have the stochastics done? They're holding support. So you have an indicator that is beginning to show a double bottom setup, a sign of life. Now, would I trade this stock tomorrow? Because what I pointed out to you was a bullish setup on a hourly chart. I pointed out to you a bullish setup on the stochastics. I have pointed out to you a bullish setup on price and also on RSI with the higher low. Would I buy the shares at the open tomorrow morning? No. Why? The reason is my discipline is this. It has to hit historical support. We're not there yet. I think we can get there, and I believe the support level that you use was perhaps from this time period back here where the close was 17.98. I would go lower than that, Anthony. I would use a range. In a bull market, I would use a range between this low, which was this closing low back during the week of October the 6th, 2014 of 17.98, and the intra-week low of 17.58. The 17.58 is my preferred price target, and in fact, I think we may overshoot it in this market environment, retest 17.23. If we get down to that level and you have your hourly chart continuing to hold this breakout point and the Stokes begin to hook back up further, that's your sign. That's your sign that it's time to begin accumulations. And I may join in with you on this trade. So a very, very good call by you on this stock in terms of a speculative trade, a contrarian trade. It's definitely in the ballpark. You're hitting on all the touch points. Now it's a matter of refining where you want to set expectations of where the stock must hit. And during a bear market, we need to set those expectations really high because it will come down to us. And if it doesn't, we have to pass on the trade. That's the discipline. I've been doing this for over 20 years now, and patience, which I was never gifted with, patience has always proven to pay off. So it'll come to us. Have faith. And if you have any feedback on this second opinion, Anthony, please send me an email. Tell me what you don't like, what you like, and I will definitely take your feedback and apply it as I hope that you apply my feedback to you. Have a great night now.